Article 53. Calculation of payable tax. In any tax period, every taxable person is required to calculate the amount of tax payable to the Federal Tax Authority, FTA. This calculation is based on the difference between two key elements. The total output tax the taxable person is required to charge and collect from customers on taxable supplies during the tax period. The total amount of recoverable tax the taxable person is allowed to claim as input tax credit for eligible purchases and expenses incurred during the same tax period. 1. Definition of output tax. Output tax refers to the VAT charged on the supplies of goods and services made by the taxable person in the course of their business activities. It includes VAT applied on standard-rated supplies at 5% and on certain domestic supplies subject to special mechanisms such as reverse charge. This output tax must be declared in the VAT return for the relevant tax period. 2. Definition of recoverable tax. Recoverable tax refers to the VAT that the taxable person paid on purchases of goods or services that are used for taxable business purposes. This includes VAT paid on purchases from local suppliers and VAT on imports accounted for under the reverse charge mechanism. However, only VAT that meets the input tax recovery conditions under the decree law and executive regulation can be claimed as recoverable tax. 3. Formula for payable tax. The payable tax for a tax period is calculated using the following formula. Payable tax is equal to output tax, total VAT charged on sales, recoverable tax, total VAT recoverable on purchases. If the output tax is greater than the recoverable tax, the business must pay the difference to the FTA. If the recoverable tax is greater than the output tax, the business may have an excess credit, which could be either carried forward to the next tax period or refunded in line with FTA rules. 4. Example calculation. Sales VAT, AED 50,000. Purchases VAT, AED 30,000. Payable VAT, AED 20,000, 50,00030,000. This amount must be paid to the FTA. 5. Importance of accurate record keeping. Taxable persons must maintain detailed records of all sales invoices issued, including the VAT charged, and all purchase invoices received, showing the VAT paid. These records form the foundation for accurately calculating the payable tax for each tax period. Any errors or omissions in such records may lead to incorrect tax calculations and discrepancies in VAT reporting. This can result in underpayment or overpayment of VAT, as well as penalties for non-compliance. 6. Filing and declaration process. After calculating the payable tax, the taxable person must submit a VAT return to the FTA for the relevant tax period and accurately declare both output tax and recoverable tax. They are also required to pay any VAT due to the FTA within the prescribed deadline to ensure compliance. Failure to file correct returns or make timely payments may result in penalties under the Tax Procedures Law. For more details, contact us.